Welcome back to Bit About Crypto. I'm David James, the Job Whisperer, and it's another Sunday. And the Bit About Crypto show, it's a human interest story. We bring on different guests, and the one thing they have in common is cryptocurrency. And it's also a way for somebody who wants to get a job in the crypto space to learn more about crypto, and they can contact us. Or somebody who actually needs people, someone who's hiring for a project, you can call us. But before I forget, I can't do it alone. I've got my co-host, Dave Hampton, robo-recruiter.
How you doing?
You been robo-recruiting, man?
Yeah, you know it.
Yeah. So if you're listening to this, the blockchain space is absolutely blowing up. And when we started this firm, did you have any idea that we're going to have this wall of energy of, hey, we need people like nothing we've seen before?
I did actually. I did feel it. The way it's been surging, the reason people are getting into it, the foundation that people sense from it. In terms of the liberty, freedom, autonomy that comes with the philosophy behind it.
Yeah, so I'm really excited about our guest. Before we get to him, let's hear a word from our sponsor. Travis, who's sponsoring the show today?
Well, the one and only, the blockchainrecruiters.net.
Hey, that's us, blockchainrecruiters.net. So like I said, what we used to do in months back was we would actually start saying, hey, I've got these jobs, or I've got these candidates. But now there's just too many to mention. Just too many. So we have everybody, community managers, BD, compliance managers, appraisers, wax programmers, Solidity, whatever Web3, people that write smart contracts, whatever the thing is that you need, right? Full stack, all that stuff. So if you actually need to get a hold of me and you've got a project, you can find me at the BTC Recruiter. That's it. I'm David James, right? And if you want to send your resume, send it to Dave, DAVE.
At blockchainrecruiters.net.
Yeah, that's right. Now we got that all the way. Hey, I wanted I wanted just to talk to you about something. So, not coming from a money background, as in I'm not learned in finance, right? I wasn't raised. I don't have any degrees in finance. I understand buy for one, sell for two. I was a bookmaker in high school. Right? I understand numbers and logic, but I really knew that getting by was tough, and. As everybody knows, I got into Bitcoin in 2013, and I've been watching the price every day since. But what I used to see is that there really were only four ways that companies would talk about making money, right? And all of them are absolutely flawed, right? The first one was you could put money in a savings account or a bank account, right? And they'd pay you 5%, right? But that was correlative to the interest rates being high. Right, and then 5% is 5%, right? You got $1 million, right? That's 50,000, right? And that can compound, et cetera, et cetera. Well, now with interest rates being at zero, bank accounts, that's really the same thing as like putting it in a bread box in your kitchen, right? And it's a negative because with inflation,
it's been negative,
right? The second way was buying bonds. Bonds were guaranteed by the United States, and there was this yield, and that's the same thing, right? And bonds could actually crash. Then the third thing was you could buy stocks, right? And you could still buy stocks today. But I think everybody in the back of their mind knows that buying stocks it's desymmetric. I don't know if that's a word, right? You say you buy Tesla at $3,000, right? It could go down to 30, right? But it's not necessarily going to go up that much, right? So that you get like 10% over a year versus losing 90% over a year, because that's an inevitable thing.
Yeah, 10% return is pretty good.
Right.
So the best mutual funds on average have yielded 10 to 12%.
Yeah, but with stocks being so high, everybody's like they're pumping the brakes a little. And then there's the real estate thing. Right? But COVID has changed real estate. And A, commercial real estate doesn't have the demand that it used to. B, certain domestic laws are saying you don't have to pay your rent. Right? And so there's that. And also it's actually overpriced. So those things have inherent risks. So what I'm seeing happening here is all these VCs, right, are going to crypto. And specifically, the world is going to Bitcoin. And I think if Bitcoin didn't exist, I think the whole world would have been going to gold. I think Bitcoin is eating gold, and
another commodities. Yeah.
Right, I can't prove it, right? And so that's why. So, as you know, I orange pilled you, and we went to Block Boom, right, last August, and I think it was when Preston Not Preston Fish. I don't remember. Maybe it was Mark. Mark was up there speaking on stage. You know, everybody had an opportunity to ask a question, right? And our next guest, Blake, he actually asked the question in such a way I didn't even really care what the answer was. I cocked my neck and I listened to him ask the question. I think I was so enamored with the fact that he asked the question the way he did. I don't even know what Mark Moss said the answer was. I just don't. And to this day, I still don't know and I don't care. And I went up to Blake later and I said to him, I said, look, I don't have a lot of time to talk. I'm David James. I'm the podcast host, A Bit About Crypto. Will you be on my podcast? He said, sure, right? And I got his Twitter. And here we are. So, like, with no further ado, let's bring on Blake.
Hi, David. Thanks for having me on your show. I really appreciate it.
Yeah, and also one of the things I didn't say is Blake is a monetary scientist and orange pill enforcer. And that's like, to me, that's like jammed up and jelly tight. That's peanut butter and the jelly, right? So,
thank you.
Yeah, so let me just ask you this. So where did you grow up or how did you grow up? Like, just say from like a little kid all the way to, say, high school?
Yeah, I'd love to share that. And I think I guess we can get back into the kind of question that I asked, because I think, you know, as you mentioned, a monetary scientist, I think the biggest question that you can ask is how big is the addressable market for Bitcoin or crypto? And then what's the risk profile? So before getting into the meat of that, you know, that was a question that I asked. I'm sure we'll get into that later.
Okay.
But I actually grew up in Los Angeles. So I grew up in Los Angeles and both my parents were in real estate.
What part? What part of LA?
I actually grew up in the Hollywood Hills.
Okay.
So, you know, right next to the Hollywood sign, you know, you used to see movie stars every once in a while.
Like Mount Olympus?
So kind of in the Hollywood.
Mount Olympus?
Mount Olympus?
Yeah. It doesn't matter. Go on.
Okay. Yeah. So I did that. And my parents were both in real estate. So the Hollywood area, downtown Hollywood is where they did a lot of the business, commercial real estate on my dad's side, residential on my mom's side. And, you know, that's what I wanted to do. I got into that, I started to get kind of my interest at a young age into commercial and residential real estate, more on the commercial side.
Did you do any sports?
Yeah, I did do sports, a lot of baseball. And then I played, baseball at a young age, and then did that in high school as well.
Right. And so when you were like 18, 19, your formative years, was there something you thought you were going to be or thought you were going to do? Like toward that emancipation time of your life? Yeah,
I wanted to be a real estate developer. So that was kind of my goal. I was reading real estate books and you know, development and kind of finance books at an early age. You know, when I must have been 15 or something like that, maybe even younger. So that's something that I always wanted to do, and I always thought I'd be good at. I felt I had the knack for that, and was always understanding finance in the markets and interest rates. You know, I didn't understand interest rates at the time, not like I do now, but I knew that was a big variable in, you know, appraising a property. And that's something that just always interests me, again, from a young age.
So being in LA, did you go to USC to understand finance, or did you throw in right with your parents and start booking deals in real estate?
Yeah, I actually went and did study abroad in Australia for a real estate finance program there. So they had a really deep, in-depth real estate finance program, a lot of cash flow analysis, discounted cash flow. So that's where I studied. And then what ended up happening was the market changed around 2008. So I had to make a career change.
Right, to say the least, right?
So, yeah. So you spend, I don't know, 6-7 years thinking that you're going to do one thing that you're pretty good at it, or you think you're going to be good at it. You get that education, and then the market completely changes. So that was 2007, 2008. And that's when they started pulling the jobs off the market. So I'd go in for interviews and they'd say, oh, you know, Blake, you know, we love your background. We like you, but we're having a lot of people come in with 10 years of experience. So, you know, we're not going to be hiring you. And then they started just pulling the jobs completely. And then companies started going down and going under. So that's, you know, what I wanted to do. And it was an interesting experience.
So let's talk about that. So let's go like 2004, 2005. Are you working in real estate? Are you putting deals together in that area?
No, I was still in college at that time.
Okay.
So
all right.
I was studying finance and getting that.
Okay, so you graduate, you come out, and then the big rug pull, as we'll say, right? The entire dynamic changed, right?
Exactly. So exactly right around 2007, 2008 is when I was graduating college, and the whole dynamic was changing. And the irony, or the interesting part, is I saw the real estate market, being able to do a large pullback. And so I called that in 2006. I was talking to my family. I'm like, hey, this just seems frothy. It doesn't seem right. And I was telling my friends at the same time, not that I had any money to do anything with real estate anyway. But I did call that kind of top or kind of market, which was an interesting thing to do at that age and have that type of interest. And reflecting back on it now, it was pretty exciting.
I want to speak on that. So like in 2006, I was in the same spot, I just saw what was going on, and you just had like hairdressers, had 4 houses, and these very like gals quitting their waitressing jobs and their real estate agents, and you would see these women driving Hummers with 2 car seats, and they're wearing their matching jade green sweatsuits with the word pink on the butt, and they're filling up the $4 a gallon. And I say, what are you doing? As they smack their gum, they're saying, me and my husband, we got a loan business, right? And I'm a recruiter. Right. And I watch what people do, not what people say. And I said to my girlfriend at the time, I said, this isn't sustainable. That means when my daughter's of age, it's going to cost her $6 million to buy this house. It's just not sustainable. And I mean, that's me calling the top. Okay. I mean, of course, I didn't call the top, and that wasn't the top. But I too realized that there's a reason you're a hairdresser, and you know, I mean, I'm not hating on hairdressers, right?
Yeah, of course.
But it just cheapened everything. We had money looking for houses, and so all of a sudden, now you're coming out of college. Were you pissed?
Yeah, I was pissed because I had, I'd say pissed, not overly upset, but I had friends or acquaintances that were buying houses in 2001, 2002, 2003, and then just writing that all the way up. So they just keep buying more houses, not flipping them, but improving them, and then kind of adding on to them, and then, but they weren't really doing any real work. They weren't really adding that much value to it. They did a little kind of, maybe a bathroom remodel or something like that, not even that level, and then they were just kind of having a good time all the time, which was great. Sound very exciting. Early college career, we're like, this is going to be. I'm going to be able to knock this out of the park if these are the people that are kind of doing this, and then the whole market contracted. But it was interesting kind of lesson where you reflect on it a little bit, where they took all those risks with, imaginary money or loans, and then they wrote it all away. They didn't have to work really, and they got to really enjoy kind of just a lifestyle.
Kind of like now. Right. Well, we'll get to that in a second. Yeah. So you're talking. I just wanted you to know, there was a guy I knew who literally he bought 10 houses within a 30-day period, and he got an extra $100,000 out of each house. Right. And I said, when he told me about this, I said, I want no part of this. I said, I don't know what happens, but I know how it ends. I guarantee I know how it ends. And sure enough, he was arrested. I mean, we weren't close, but I just...
Oh, he was arrested?
Yeah. You talk about stuff like that. You're going to talk about like how this is a good idea, right? And because he saw the end, et cetera. I said, don't walk away from this, run, right? And and also a good friend of mine who I grew up with, he became a school teacher in Paso Robles, and he says, I make more money from my house than I do from my job every year. And it was like, and there was this perpetual thing where people were just saying, well, we'll just live indefinitely off the refinances of our house, right? So can you speak on that a little bit? Did you see people doing that too?
Oh yeah, and that's what this gentleman was doing that I was mentioning, refinancing the house to buy another house and leveraging that house, and then the 3 houses would appreciate, and then he'd have enough for a 4th, and just kind of keep doing that over and over again, and rode a real quick, doubling of the real estate market or whatever the numbers were at the time, in a short amount of time, and just rode that with no real finance background or understanding of macroeconomics, which I think that's why this is so confusing to so many people, where it's like these people are making more money from their homes appreciating than they are from their careers, and they are. And so people get frothy, and then they want to be a part of that. And, it's understandable that, when you work a job for 365 days a year, and then you've got somebody that just made a purchase and got a loan, or got a loan and made a purchase, that you'd want to be a part of that as well. So it's just kind of human incentives, which I'm sure we'll get into a little bit later.
Yeah, before we talk about how history is not repeating but rhyming right now, right? I personally think we're like 2005, 2006, if you know what I'm saying. I just believe that eventually the balloon gets just too heavy. But we're gonna come back to that. So I'm gonna ask you this, my signature line. How did crypto find you?
Well, we can get into the problem, which I saw, which is some of these things. But ultimately, my story was, I saw the problems, and so I was ready to move into Bitcoin immediately. And so someone sent me some Bitcoin, and I didn't think much of it. But then I watched an Andreas Antonopoulos video.
What year is this?
And then I got it immediately.
What year was this?
This is early 2017.
Okay, go on.
Yeah. And so, that gave me, and for a lot of people, it takes multiple touches. And I guess there was a Netflix documentary that I did watch, or it was on something. But once I got that it was a replacement for the Federal Reserve, and it is, potentially new money that can't be seized, and it was around long enough that it hadn't been compromised. In other words, it's proven itself as a system in the environment like that. I kind of knew that immediately, and then I was full on 100%. Into the space and educating myself and understanding the reasons why, and diving deeper into all the facets and the rabbit holes that Bitcoin provides, and that's how I kind of got into it.
Okay, so so when you say you got into Bitcoin, you call yourself a monetary scientist and an orange pill enforcer. Okay. I mean, I wanted to give you as much runway as possible to talk, right? Because now we are in 12 years later, right? In my opinion, is that the economy is, since the crash, we built back artificially, right? Instead of punishing the villains on Wall Street to cause this problem, we punished the victims. We punished the victims is what we did. And on top of that, we've been pushing money into the economy, keeping it falsely propped up for all this time. And then all of a sudden now we're lowering interest rates, which is keeping the economy on fire. So then we can talk about that. We can talk about COVID and the money, wherever you want to go.
Right.
Go.
Well, let's go. I guess I'll go back into the story and parlay that into, what I saw as the problem. And that's why I was so ready for Bitcoin when I heard about it. And when I got it and watched, one or two of Andreas's videos, which is when I started understanding the Federal Reserve and how money is being printed, and economic systems, the cyclical nature of the debt cycles and that money printing, which relate, gets into real estate bubbles and stock market bubbles and the Great Depression. And so, I was a big Ron Paul supporter, before that, probably in 2000, I forget when he was running, but, I was a big and the Fed guy. And that made a lot of sense to me. And so, that's what primed me understanding the problem and how complicated fractional reserve banking is a great example where the money that you put in the bank is not actually owned by you. Both you don't own it, and then they fractional reserve it out to other people. And of course, when you say that out loud and you understand that from, maybe other systems, it's crazy to think that a business and a bank and a system is designed to do that. And so the interesting thing about Bitcoiners is that they are the most risk averse people that I've found. And that's why they moved into Bitcoin. And the irony that most people say that Bitcoin is is a risky investment.
That's right.
is funny, because the whole reason you understand the banking system, fractional reserve banking, hyperinflation, fiat currencies, and the history of these things, there's no way that you're keeping your money in a bank. There's no way that you're keeping your money in fiat currency.
They're confusing the risk with volatility. They see volatility and they call that risk, right?
Right.
So and if you look go on.
Okay.
No, but during the crash in 2020, the crash, right? Stock market goes down. They stopped trading. Bitcoin goes down, but Bitcoin went up quick. It recovered quick. Stock didn't.
Right.
Right.
Yeah, and I think that's important for most people to understand, is there's a difference between volatility and risk, right? And the thing is, most people, including financial advisors conflate the two. There's a difference between volatility and Bitcoin is going to be extremely volatile, but it's the risk-free asset in the market right now. In other words, if you look at all the assets you can invest in right now, it's the least risky investment out there if it were just to stay stable. If you just wanted to store your wealth in Bitcoin, but it also has of course, the ability to appreciate at 200% a year. And so I think people need to stop conflating those two terms, but it's understandable that they do because it's something that's often mentioned a lot in mainstream, media, CNBC and things like that, that it's too volatile and that therefore it's risky. The other thing is, from a risk perspective, is that it's new, and so therefore it seems risky, as opposed to built on sound principles, and the way it's designed is, designed to survive a nuclear war. And so that's an interesting thing to think about in terms of its stability. And I think understanding those two things would really help a lot of people understand that, it's not a risky investment, or potentially not a risky investment. I don't want to be a financial advisor. It's not financial advice.
This is edutainment. Edutainment is what this is. Okay.
Right.
So we've got a lot of things going, and you can go wherever you want, right? But we've got the quantitative easing, which probably a lot, remember, people are coming to this because they want to learn about crypto, right? And so there's quantitative easing that happened from the government right after the financial crisis. They kept doing it, right, to keep the markets. Right. And then they started lowering interest rates, right? And then COVID happened. And then there's these massive giveaways, and interest rates are zero, and tapering, not tapering. The way I see it is, and now we've got inflation, and the only way we can stop that is raise interest rates, but then we're going to default, or we got to actually slow the velocity of the money. And the only way they can do that was with another shutdown. So you take whichever bites of the apple you want, but I want to hear your take on all of it, however you want to frame it.
Yeah. So I think the starting off the framing of how I think about Bitcoin is, I like to think about it as a risk versus reward. And I think that was the question that I was asking Preston Pish and Mark is, what's the risk of this thing breaking, and what is the upside of Bitcoin? As well as then you start to analyze the risk reward profile of fiat currencies and the banking system, right? Every time in the current economy. So we'll get into, the interest rates and Austrian economics. But I think that's the easiest framework to allow people to get into Bitcoin, because it becomes a question of how much you put into your portfolio in terms of Bitcoin versus if you invest in Bitcoin at all. Because if the numbers are, I think, and that's so that investing framework, the risk reward, what's my risk of loss and what's the upside, is a really simple way for people to think about, is a mental framework for them to continually to peel back the onion on both areas. The Bitcoin might be more safe than they think, and safer investment, and the current system might be more risky than they think, right? And then again, the total addressable market, how far does it have to go? So I think, going back to the problem or how risky the current market is, one is that the Federal Reserve and the fiat systems right now don't have an option but to continue to lower interest rates. Because if they, as you mentioned, David, if they raise interest rates, that means the government's going to go bankrupt. And a lot of the bonds in the market are going to go bankrupt as well, or not the bonds in the market, but the companies in the market are going to go bankrupt when interest rates start increasing, as well as people are not going to be able to afford their homes. So if interest rates triple or go up to 20% like they did in the 80s, you're going to have, foreclosures are going to go through the roof. And so once you understand that the Federal Reserve and that system, one of the only ways is to continue to increase or to continue the Ponzi scheme. That's their option. And that's why they continue to print more money. And that's why it was so frustrating in 2008 when they printed more money. And what did they do with it? They didn't give it to grandma and grandpa. They didn't give it to the homeless. They didn't give it to the people that need it. They didn't give it to teachers. They didn't give it to students. They gave it to the bankers, and the bankers made a ton of money. And they did that because they have to, if you understand Austrian economics, they have to continue to print money to keep the system afloat, because you can't taper a Ponzi scheme. And that's exactly where we're at right now, is a Ponzi scheme.
So I want you to talk to the audience in such a way.
Okay.
So everybody there's this mad rush about I got to get a house and my house is going up, and there's this we once again have money running at houses as opposed to houses running for money, right? Back when it was sustainable, all the way from the 40s, right, to the great crash of 2008, right? We once again have money running after that, and so there's something that's got to trigger this crash. Right, or inflation is going to get so bad. I don't know where the balloon is going to leak, but I know you got an idea.
Yeah, I have been thinking about this a lot because a lot of my friends are buying real estate, and I think you have the fundamentals where it used to be one of the fundamentals is people's income and their ability to pay rent. So that's kind of your baseline for a mortgage. But then you've got the variables baseline to compare it to a mortgage, but then you've got the variables of interest rates, right? So if you make, let's say, $100,000 a year, you're willing to pay, let's say, $2,000 in rent a month. But and that's just what you can afford in terms of your salary each year. But if they drop interest rates from 20% to 1%, your mortgage payment a month is dropping by that same ratio. So it's dropping to 1/20th of what the
so your 2,000 a month is 100 a month.
Correct. Right. And so I think it's good to understand that, and those are the fundamentals. And I shouldn't say air quotes; those should be the fundamentals. But now you have a really different variable going on right now, which is we're potentially inflating at a arguably 15% rate. Right. So if we're inflating it at above 10%, that means that we're already in a real estate crash. We're just measuring it in the wrong unit of account.
Okay. Talk about this. This is excellent. Talk about this. But remember, you got to go to
simplify.
Yeah.
Great. So what I meant by unit of account is you're using the measuring stick of the dollar to understand the value of a property, right? And so we all know about inflation, and we know, and we've heard about properties that were bought in 1970s, right? And now they were bought for $50,000, and now they're worth 1.2, 1.3 million, right? The value of that land, and more importantly, the value of that property didn't become, 20 times more valuable, right? And the same thing with coffee and consumer goods. Coffee used to cost 10 cents and now it costs $4.50, right? Did coffee become that much more valuable, 450 times
or that
more
much
valuable?
scarce, right? Yeah, that much more scarce.
Or that much more scarce,
right?
No, you start to not look at things in terms of the value of the unit of the currency, and you realize it's not all those things that are going up by that amount, but the value of the currency is going down. And so,
can I get a witness? I've just been preaching this. Can I get a witness?
Amen.
Thank you. Preach, Brother Blake. Preach.
Amen. Hallelujah.
And so, when you make that shift into measuring it in other ways, maybe that's gold, maybe that's S&P 500, or maybe that's Bitcoin, you see that it is losing its value. But the difference is that we're seeing the money printing increase so much that it looks like the value of our houses are going up, but they're not going up. And since they've increased that so quickly that, we might be in a recession right now in terms of housing prices, but we're measuring it in something that's inflating at 10 to 15% a year. And the government just printed $8 trillion of it. So because we think in dollars and people think in dollars, they can't measure the real value of their house, and they think they're making more money in terms of purchasing power, but they're not. So that's the thought process there. So it's hard to, I think the real assumption is to try to understand, the fundamentals used to be if someone can afford a house, right? But now because they're printing so much money, interest rates are so low and they may continue to decrease it, the value of the house might continue to go up, forever, because the inflation is going to continue if inflation continues, and we can kind of argue that point. But the interesting thing from somebody that can get a loan is if you can get let's say that you're a young person and you're doing well in your career and you can get a loan for $1 million, you put 3% down. If inflation is at 10%, and your interest rate, your mortgage rate is 3%, you'd be silly not to get that piece of property, right? Because on twofold, you've got the value of the loan that you're going to pay back in the future is decreasing by 10%.
Right.
And then the value of your house is also increasing at some number, maybe let's say 7%. So you're making a 17%
Alpha.
profit,
Right.
alpha each
return.
month without doing anything else besides putting your money into that property. And so that's the crazy thing that's going to continue to put people that can get those loans till we exhaust them to continue to get those pieces of real estate, because why wouldn't you do that, right? It's free money. And then the worst thing that can happen, or maybe one of the worst things that I'm not entirely sure from a legal perspective, is that let's say it doesn't work out. Let's say that we go into a recession, you can't afford the house. And this happened to that acquaintance that I knew from college. It was buying all those houses on the way up. He just declares bankruptcy, right? So the worst thing that you can have, arguably, is a bankruptcy of those particular properties. And so, the risk reward, going back to your teacher kind of example, is that he's making, let's just say $50,000 a year, but the home is appreciating at $100,000 a year. So he could potentially just sit on that property and live off that property, especially if he continues to buy more and more property. The main factor that is hard to understand, or is a variable that's not inputted in these valuation models, is the true inflation rate. And so that's never, hardly ever inputted into the models. So again, let's do simple math or try to simplify this into a real world example. If you can buy $1 million piece of real estate, you put 3% down and you have a 2% interest rate, and inflation is 10%, you're making that money, you're making 8% on that that asset in a lot of ways. And so that's where the real math comes in, right? Because everyone says they're up to debt in their eyeballs, but that's a good thing if there's a high inflation rate, right? Because it's the debt that you have to pay back in the future is less in terms of real purchasing power. Does that make sense, David?
It does to me. And Matt Odell, Matt and Odell and Marty Bent, right? Rabbit Hole Recap, right? Matt Odell made a great point, and it didn't take for me, but I've really been starting to think about it. And he says, we're not going to have any real price discovery until everything is priced in Satoshis and sats. And for my audience, we're getting new listeners every week, and thank you very much for all the kind things you're saying. But a Satoshi is a unit of account in Bitcoin, right? You move the decimal point to the right, you could go 8 spots, all right? And there are 100 million Satoshis in a Bitcoin, right? And I'm just saying that for you right now, Blake, right? When we start pricing things not in dollars, but in Satoshis, right? Or in units of Bitcoin. And also what's happening with the world going to Bitcoin. All the bankers, they're not going to like it. Every financial advisor doesn't like it for the same reason that taxi cabs didn't like Uber, right? For the same thing, for the same reason that Nordstrom's doesn't like Amazon. Right, it's disruptive, right? But it's you can't stop you can avoid an avalanche if you're on top of it, but not from the bottom. So, anything that you want to say about how you prognosticate or forecast or predict the world's going to go? Right, I had someone say, "Hey, this El Salvador experiment is going to fail because people aren't going to buy coffee with Bitcoin." I'm saying, "Yeah, they're going to pay with Lightning, right? I'm not going to, right? Like right now, I can take my Lightning wallet, I can take cash from my bank, right? And I can pay you in Bitcoin. I don't care because I'm paying you in Bitcoin now. I'm not paying you with the Bitcoin that I bought, right, when it was like 50 times less." Right, right. So there's and BitBoy Crypto, he said that, and it's like and he's a hack, and he wants you to pay money to go on his Patreon channel, and I guess all right, and that's not what we do here. We want to educate people so they can make their own decisions. I said a lot of things there, so can you comment?
Yeah. I think the way I look at the payments aspect is more of a marketing campaign for Bitcoin. So the fact that people, for some reason, most 99.99% of people on the planet think of money as just something you can pay with, which is a medium of exchange. In other words, I want to buy my coffee. But the most important value of a good money is that you can store your wealth in it and you know that you can retire on it. So if you had $3 million today, that should be enough for you to retire. But if things are inflating and the cost of everything is increasing by 10 or 20% a year, that you can't forecast what you're going to need in 30 years after you've retired, right? And so that's a very hard thing. Is a hard thing to gauge. But with a money that is limited in amount, 21 million, that you're going to have, let's say, 4 Bitcoin out of 21 million, and it's going to increase in value. And there's nothing that anyone can do to debase that, right? And so I think what I'm saying there is that the medium of exchange Lightning aspect, for someone being able to pay with Lightning and have a almost free transaction, that might be an aha for them and is more of like a marketing campaign. What I think the really interesting thing from a hyper Bitcoinization standpoint is the fact that one of the question that I ask Preston and Mark and just about anybody is, how big is this market, right? Because if this market, the store of value Bitcoin market, is 900 trillion, I'm looking at let's say 900 Jenga pieces that are $1 trillion each that can fall into Bitcoin at any time. This old economic system is getting less stable, and anytime one of these things fall in, it could literally push us to hyper Bitcoinization. Are you following?
Yeah. But
process?
I'm following it, but I've been a student of Bitcoin since 2013. Why don't you ask some questions there? I mean, are you getting it? Because you're newer.
What do you mean by hyper Bitcoinization?
Yeah, so hyper Bitcoinization is the moment where the traditional system or the traditional money realizes that they are in the old system. And the problem with that,
that they've been replaced. Are you saying that they've been replaced by Bitcoin?
Or they're in quicksand. When they're in quicksand.
When they're in quicksand, when they realize that they're in the wrong place. So Bitcoin looks like the wrong place right now because it's volatile and it's risky.
Right, it hasn't stabilized. It keeps going up. It goes down. They're like, I don't know about that. They don't know what it's worth or what it's not worth per se. In other words, that's the argument that I've heard people being hesitant for.
They're confusing volatility as a weakness.
And if you ask them what the value of a Bitcoin is, you're going to get blank stares. And I think, what is the value of a Bitcoin? Is it worth? You ask those type of people that are saying the volatility is a challenge. Then what's the price of a Bitcoin? Because if the price of a Bitcoin is worth $1 million, then it doesn't matter. Just eat out the volatility.
You mean the worth?
Right out the.
You mean the worth? You mean the worth of a Bitcoin?
Worth
versus a price.
Yeah. Did I say something?
You said price.
Yeah. The worth.
Yeah. If the worth of a Bitcoin is $1 million, then the price doesn't matter. I think that's what you were trying to say, and I'm not trying to put words in your mouth.
Yeah. No, that's exactly what I was trying to say.
Okay.
Thank you, David.
Yeah.
But the difference with the hyper Bitcoinization is that imagine you're in a country where you see the government becoming unstable, that you're seeing the currency hyperinflated, and that starts to wake you up. That starts to shake you up.
Wait, Blake.
To get into something.
Blake, I live in that country now.
Well, we're not Zimbabwe yet. I mean, that's not where we are right now. So, just yet.
So that's what can happen, Dave. Is like the switch can happen quickly when somebody realizes that their safer investment isn't Bitcoin, as most or a lot of the financial market is kind of starting to wake up to. That's when you'll have the movement in hyper Bitcoinization or the money, the $900 trillion in assets that can move into Bitcoin starts to move into Bitcoin. That'll start gapping the price up, 100,000, 200,000, 300,000, 400,000, which will also make sure that everyone is now paying attention, right? So all those people that have listened to your podcast or your podcasters have talked to their family and friends, they haven't been paying attention. They might have heard about it, but they haven't done the research. They couldn't articulate how money comes onto the market, why Bitcoin is worth any money at all, if it's worth $20 million a coin or $1 million a coin. And so once that happens, that'll get the rest of the market to wake up to studying, Bitcoin, understanding monetary history. And then, potentially the rest of the market will also flow in just because they're FOMOing and they're realizing that the current currency that they're using is not working or is inflating away.
Mm-hmm. Got any predictions on what's going to break the machine?
Well, hold on before you answer that.
Go ahead. Sorry, David.
Have you got an answer to your question?
I think that's why David reached out to me, because I ask that question every time because I wanted to see people's mental frameworks. So Robert Breedlove, Greg Foss, and Michael Saylor all have some pretty high numbers. So Greg Foss, if you don't follow him, he's a man that traded the bond market in Canada and has an amazing track record understanding bonds. And he's been on a lot of podcasts. And his assessment is it's a $900 trillion asset class, right? And so if $900 trillion were to come in Bitcoin, that's an easy 900x from here, potentially even more. And so, the numbers that you can see is close to $25 million a coin per Bitcoin in today's dollars, obviously. In the future, so I'll pause there and I'll see if you got any questions.
I'm following you, so I'm captivated. So go ahead.
Okay, right. So now it's starting to get your attention. These numbers are there. Like you're saying, there's a chance that Bitcoin, is there a 1% chance, or is there a 10% chance? Is there a 90% chance that Bitcoin reaches $25 million, or somewhere in that group, 10 million to 25 million?
I've always, if we're always. I guess this is the part that I've always struggled with. We're always talking about it in dollars, but if the dollar isn't worth what it says on the dollar bill, right, or whatever bill we're talking about, then what are we actually measuring it in? That's what I've always struggled with. Okay, but we're talking it in something that's not valued at the face that it's saying it is. So I don't.
Correct.
So it becomes so in essence it becomes its own way of bartering, because it's accepted as whatever the Satoshi is, right? It just becomes its own form of bartering.
Before you answer that, Blake, the problem with the dollar is it's still a unit of account. It's still a medium of exchange, but it's a placebo, and it's falsely viewed as a store of value.
Yeah, I get that.
And okay,
I get that, but we're always talking about the metric of a Bitcoin in dollars.
Yes, yes, we are.
Right, but what you just said contradicts it to me. It's baffling, or it confuses me as to why would we actually talk about Bitcoin in terms of something that isn't worth what it's saying it's worth. Does that make sense?
Yeah.
Yes, it does.
Zach, I'm not smart enough. I need you, Blake. That's why you're here.
Do you get what I'm asking? Because
I know exactly
this
what
is
you're
the part.
asking.
This is the part I've always struggled with. Is what made me hesitate to get into it to begin with, because we're always talking about it in something that's not as valuable
as inflating.
Right.
Right.
Yeah.
So then you're going to have to start to use it like almost a basket of goods in the future. So like it'll be able to buy you 20 homes in Huntington Beach and X amount of coffee. So it is hard to do, because we're trying to say today's dollars in terms of there's $900 trillion in assets that can flow into Bitcoin, and we're measuring those assets in terms of dollars, right?
Right.
But we're not measuring them in terms of Bitcoin. So what you could do is divide the $900 trillion of assets by 21 million to get your number, and that's in today's dollars, and then use that number to see what that buys you today, to give you an understanding of what Bitcoin will be able to buy you in the future. Does that make sense?
Okay, so you divide 900 trillion divided by 21 million. Okay.
Right.
All right.
And then you're just trying to see what that can buy you today. What it can, that amount of money buy you today. And then that'll give you a baseline for what you're going to be able to afford with one Bitcoin in the future.
Okay.
And so the interesting thing as a thought experiment, especially if you're too late or too early, and this is kind of on your point, David, that imagine you're the last person, let's say in Venezuela, right? Or not in Venezuela, the last person to have fiat currency in Zimbabwe, and the currency hyperinflated.
Right.
You're one of the last people to realize, hey, I'm the last person on this train of realizing that there's a better money, let's say Bitcoin. And someone's willing to, you're willing to take those, $100 billion notes from Zimbabwe. There it is.
Yeah, I got the last one. I got the last one, dude.
Right. You've got the last one. And if you're silly enough, if I'm silly enough to trade you part of my Bitcoin, let's say 100 Satoshis for that piece of paper that is worthless, that last person that has that last dollars, that last trade will always make sense to take the fiat currency and buy Bitcoin with it, because that currency is hyperinflating away. And as long as you have one person that's willing to trade their Bitcoin for a piece of paper that's inflating away, that trade will always make sense.
Yeah. Yeah.
So that kind of goes to people's question if they're too late or not. If you can find someone that's silly enough to trade a piece of paper for some Bitcoin, then you should take them up on their offer. And then you're not too late, because someone else might do it in the future, and you just want to be left with the bag of pieces of paper, fiat currencies in the future.
Yep.
And so I think that's an important thing to think through.
I want to talk about this. So 2013, right? When I heard about Bitcoin, it was like a little over $100, right? And when I was able to actually get enough money to buy some, right, it was 210. I buy 10 of them, right? I'm rounding up my money. I'm getting my money right. Right. And then I got another 2,100. I was got to buy 10 more. Right. And then all of a sudden the price went to 380. It's like, what a ripoff. I'm not doing that.
Right.
I paused.
Yeah.
All right. Instead of buying 5 Bitcoin, right, for whatever it is, right, and have 15, I got 10 and I got 200, another 2,100 in fiat. Then the price goes to 1,000 in January of 2013. And I literally said, it's over for me. It's over for me, right? And so I literally was talking to a guy probably no more than probably like late summer of 2021 when Bitcoin was at 30,000, right? And I said, you got to get it. And he goes, nah. He says, I'll never. He said, I said, and then all of a sudden it went up to like its all-time high, right? Recently, a while ago. And then all of a sudden it's like, I should have bought it at 30. It's like, I don't know how, when people see the big unit, how they actually can understand, how I make them understand that, it's get some. Well, I tell people, just get $25. It's going to be so scarce. So,
well, I think that's why the investment framework and thesis makes so much sense. Is it worth $25 million a coin? Is it worth $10 million a coin? It's more than zero. It's more than $1. It's more than $1,000. It's more than $5,000. So almost putting it back on that individual and saying, what's it worth? And that's why the question is so important to me, because it's the mental framework that you can start to go through with people. Is it worth 25 or $30 million a coin? Great. Let's round down and say 10, right? And then let's talk about the probability of it reaching $10 million a coin. Well, then you start to get into, I think the two things from a risk perspective. The thing I like about Bitcoin, it's similar to the internet, right? Where it's like TCP/IP, where it's the base layer of the future monetary system. In other words, if you can buy Bitcoin or you can buy the internet in 1999, you should have bought the internet, right? It's a very stable process. It's always increasing. It's impossible to break. It's a programming language. So it's a way of communicating. And what I'm saying there is that Bitcoin is like that as well. It's like buying a share of the internet. So there's not much risk there. But nobody knew in 1999 how big the internet would be, that we'd be having a Zoom call in different cities right now. And that, we'd have cell phones that would be able to replace most of, our computer devices, calculators and those type of things. So it's understandable that people didn't get the value of the internet then. The difference with Bitcoin is that money is a system that's already existing and that we know Bitcoin can replace. So if we know Bitcoin can replace at least $100 trillion in fiat currencies, what's the probability that Bitcoin will replace those assets? And because we have 5,000 years of monetary history, we have 5,000 years of monetary experiments to understand which money wins and why. And when you figure out the 5 quality or the qualities of money in order and in proportion, you start to understand how much of a risk-free asset Bitcoin is, that it's going to absolutely dominate and destroy all other fiat currencies. And once you start to make that assessment, like you become even more bullish and you become more confident. So I think that's the healthy framework for people to think through, because it's their own assumptions. They think there's a 50% chance that Bitcoin becomes the global reserve currency. That's fine. If you believe that it's a $200 or a $20 million a coin potential, then you take your probability of the outcome, 50% times the outcome, 20 million, and you have $10 million a coin. Therefore, you should be buying every, Bitcoin under $10 million a coin if you're using that investment model.
So
does that make sense, David? Or
no. I mean, you're getting it, and this is one of the episodes that even I am going to have to re-listen to. No, I listen to them when they come out, but it's like sometimes when you listen to Robert Breedlove talk or Michael Saylor, right? He says so much, and it's like he's got you on that concept, and he's talking 3 concepts, and you go back and you hear it a second time. It's like, I didn't hear that the first time because I was still grasping the new concept. And that's kind of where you are. And I like golfers who are better than me because I learn more. I like people who are smarter than me because I learn more. And you're in that population. I'm not being cagey. I got 2 topics I want to talk to you about before we sign off. Number one is like, I'm a Bitcoin evangelist, okay? And I call myself a coinosexual. Right, I'm attracted to all coins, right? But Bitcoin for me is it's a hold. It's a position. Bitcoin's a position. Everything else is a trade. All right, and I'll tell you this: a guy told me to get rid of all my Cardano at BitBlock Boom 2020. It was 9 cents. Right? He told me to get rid of it. Right? Well, Cardano has gone up 30x in 15 months. Bitcoin hasn't. Right? So the trade of Cardano for me would be to get more Bitcoin. I just say that. So I tell people, they say, well, what should I get started with? I always say Bitcoin. All right? And it's like, well, what about these other coins? I said, well, what about me? You didn't ask me what about these other coins. You said, what should I get started with? Okay? If you got your own answers, then don't ask me. And I always get this when I orange pill people into Bitcoin. Without fail, 9 out of 10 people, they look into it, and what do you think they call me back? The next text is, after I tell them about Bitcoin, what do you think they say?
Should I buy it?
What about ETH? Every time.
Oh, yeah.
What about ETH? And I go back. I go, what about it? Right? And so for me, I'm not saying that you can't make money with ETH. If you want to take a position on ETH, then you do that, whatever your own personal strategy is, right? Position versus a trade. But for me, ETH is just another fiat currency, right? I mean, it's basically, it's a monarchy run by one dude, right? It's not decentralized, right? Vidal can change the rules, whatever. I mean, and they've got identity crisis. We got ETH 2.0, right? Now we got Pulse Chain coming. We got Cardano. We've got Solana. We got Polkadot. We've got all these things that are actually going to cannibalize these things, right? And so, how does Blake answer the question, the money scientist orange pill, when people say, well, what about ETH? Or what about fill in the blank here that's not Bitcoin? Because there's only one Bitcoin, right? And when people say to me, well, somebody could actually take the entire blockchain, right, and make another one. It's like, yeah, it's like me making Macebook and getting 300 billion people to come on over to Macebook. It's like, no, I know the NSA is looking at it, but this is how I talk to my kids, so I'm still using it because I'm on the Death Star in it. But I digress. Can you speak to the ETH, Bitcoin, or whatever?
Yeah, of course. So I think for me, when I hear that next question, it's the same problem that most people have in understanding Bitcoin and money and what the probability of Bitcoin becoming the world reserve currency is if they understand money and the top 10 qualities of money, then they understand that Ethereum isn't even close to Bitcoin. It's a cryptocurrency. It's traded on CoinMarketCap, and Coinbase will sell it to you, but that doesn't mean that it is a good money. And so once people understand the 10 qualities of money in order and in their proportion, in other words, having a limited supply is 10 times more important than the second best quality.
That's right.
And if they understand that, or begin to understand that, and understand the history of why certain monies win, and look at all those use cases, then they understand Ethereum is just another fiat currency or bad money. Then the other thing is there's so many problems with Ethereum. One, it can't scale. Two, it's got a 70% pre-mine. You can't run a node.
Tell people what the pre-mine means. Tell them what this means. I wanted you to say that.
Pre-mine. So pre-mine means that somebody took 70%, issued, let's say, 1,000 shares and took 70% of those shares. And that's what Vitalik and his team did with Ethereum. And so he's sitting, he did at least at some point sit on 70% of the Ethereum supply.
That's right. So it can't scale, can't pre-mine. Can't scale, can't pre-mine.
Can't scale pre-mine.
Right. What else?
Not a limited in supply and not decentralized.
Got it. Right. And so if you in the audience don't understand that, right? You go back and you understand what all those 4 things that Blake is talking about mean. Go ahead, Blake.
Yeah, so the limited supply, let's dive into that, because I think that's the crux that everyone should look through this aspect, or these assets or these cryptocurrencies or just currencies in general, right? And so imagine that you have all these Ethereum monopoly board, you've got a Bitcoin monopoly board, and you've got a fiat currency monopoly board. And the fiat currency monopoly board, people are printing money and they're taking that wealth from their people by inflation and giving it to their banker friends, right? And then on the Ethereum board, they had a 70% pre-mine. In other words, they didn't give out money individually to everybody. They are literally took 70% of the net worth of the board and are using it to buy assets around the board. So once you start to understand it as a little bit of like, as an example of monopoly boards, it starts to make a little bit more sense. And you get to understand like, hey, I don't want the banker to be able to print as much money as he or she wants and then give it to his banking friends. And then they buy all the real estate around the monopoly board.
Correct.
And that's the way to look at the framework of limited supply versus a game that's a little bit more a monopoly board with Bitcoin. The earlier you get there, the better off you're going to be. The more times you're going to go around the board, the better off you're going to be. You're going to get more land for cheaper. And the faster you get off all those other monopoly boards, the better off you're going to be. But there's a trend of not every smart person, a lot of smart people are moving off the other monopoly boards onto the Bitcoin monopoly board, and they understand why. And so that's kind of the number one frame to look through it as. And then you've got the other things that would make a cryptocurrency or not a cryptocurrency kind of more valuable. Again, the pre-mine, it can't scale. In other words, they have $100 transaction fees right now or more, I think.
No.
Last time I looked.
No, to send $2,000 in ETH, it was $600, man. Think about that for a second. 35%.
That's really nuts.
Yeah. And that can't fix that. Hey, I'm go ahead.
Go. I know we're running out of time.
Well, no, we can go a little long. I just because
okay, great.
You're dropping knowledge. Continue.
And then you've got just basic engineering protocols. Like it can't it's not decentralized. You can't run a node, and then it can't scale. Right.
Hold on a second.
When
talk about. No. This is my audience. They're going to want this, and they're going to ask, well, what's that mean? So talk about the whole thing about how you can't run a node and why that's important, right? And what Bitcoin is.
So going back to the monopoly board example, you've got Ethereum that they say they have the rules, and they're showing you the nodes are important because you can check the rules of the game. With Bitcoin, it's very easy to run a node or run the software. You just put it on, almost any computer can handle it. With Ethereum, almost no computer can handle it, right? So you can't check the rules of the game. You can't validate that everyone's playing fair by those monopoly board rules, right? And so that's the kind of analogy that you should think about it. If you can't trust and you can't run the software to make sure that everyone in the game is playing fair, then they might not be playing fair. And we already, with the 70% pre-mine, there's already an inclination that that system is not playing fair. And if you can't validate the rules of the game with a node, then you don't know if they're playing fair or not. And so that's a concern. With Bitcoin, you can run a node.
So I got one more thing to add. Two things. Let's talk about the infrastructure bills, right? That I don't think are going to pass, right, because of the Democratic infighting. But let's just say that they did, and now there's $5 trillion more just thrown in the economy, and we print $5 trillion more dollars. Talk about how taxing and damaging that is, even to the people who think, well, hey, I'm going to get some of this free cheese. As a monetary scientist, talk about how damning and bad that is.
Yeah, I had a conversation with a friend that's in the military, and he is an officer, and he's got a contract, and he's supposed to retire at some point in time, right? And if these continue to inflate the money at 20% a year, his retirement account is going to be worthless. It's going to be pennies on the dollar in not that amount of time, and not that long amount of time. And so as these governments continue to print more money, there's almost a race around the world to debase the currencies. So, David, I think there's a more likelihood that the government is going to continue to print more money and continue to debase the currency. Because if you look at the last 50 years or 70 years, there is one trend, and it's continuing to print more money, acquire more debt, and put the government in a financially in a way they cannot pay the debt off.
Yeah,
and
but
so
there's a social peril to that I see. All right, then that's mass inflation, and it's just like when the already eroding middle class and the lower class, right, can't actually get basic necessities, then we've got absolute anarchy, and that starts the fire for me.
Well, and we're kind of already seeing that in a lot of ways, but I think the difference with Bitcoin and hyper-Bitcoinization over what's happening in Zimbabwe, or what happened in Zimbabwe and what's happening in Venezuela, is that when your money goes away, you start to have to barter. You have to,
there we go.
Hey, can I give you this computer for 20 burritos? Hey, can I give you this, iPhone for a tank of gas? And the system just starts to collapse. But what we have here is going from an inferior money to a superior money.
Yeah.
So the beautiful thing is that it will happen even faster because it's a flip of a switch. So as soon as people realize that they're in the inferior ecosystem and they have their bonds or their retirement account in the worst system, they'll move it over to the better system, and it's just like that. And then they'll start, as you mentioned, David, you're starting to price things in Satoshis. And soon, at some point, people will move away from fiat currency and start pricing it in Satoshis, as we're already seeing in El Salvador, right? So people in El Salvador that are thinking in Satoshis and Bitcoin, they're going, everything's getting cheaper. This is fantastic. And at the same time, they're using two currencies. They're using the dollar. So they're also seeing the value of everything increasing in terms of if they're measuring it in the dollar. And so you're already seeing that mindset shift with people. And I think we're going to continue to see it. We were seeing one example with El Salvador, and it'll go from the smallest countries with the weakest currencies all the way to the biggest currencies with some of the stronger currencies like the euro.
So my last question is the question that I asked, because I think you were right behind me. No, I was first. I was first in line when you asked that question. And it was to Mark.
Okay.
Was it to Preston? Did you ask Preston?
It was to Preston.
It was to Preston.
Yeah.
I didn't ask Mark Moss, right? I spoke to him in the hallway. And here's what I said. I said, this is what happens. When the market crashes, the stock market crashes, Bitcoin correlates to that, right? If the stock market was to go down by 20% right now, Bitcoin would go down because so many people who actually have stock positions also have Bitcoin, right? But Bitcoin comes back faster. And I asked him this question. I said, what needs to occur for there to be a discorrelation between the price of Bitcoin and the markets? And I don't know if he didn't understand the question or if I didn't understand the answer. But what he said was, when Bitcoin becomes $5 million a coin, then it'll be discorrelated. And I went, I bet you
$5 million a coin?
He says, yes. He says, by the time that Bitcoin is $5 million a coin, then the stock market could go 50% crash and Bitcoin will just
I guess the question I would ask is, okay, so what's the correlation between the market cap value of the stock market vis-a-vis Bitcoin right now?
Well, but right? I think they're two different questions.
Well, no, they're well, if you're assuming that they're correlated, then you got to look at the value.
Let me tell you why they're correlated right now. All right, because people who have stock, they also have Bitcoin, and when the stock market crashes, they're on leverage. They need to liquidate stuff, and they liquidate their Bitcoin position so they can pay. And the first thing people are going to get rid of, right, when they're in fear, because investing is fear and greed. That's the only two emotions that exist. They're going to actually get their what they call. There's a lot of people who are inaccurate in their thinking that own Bitcoin or Bitcoin futures, whatever. And what they're going to do is they're going to actually liquidate what they consider to be the riskiest asset right now to pay off their stock, right? And so I think that's a real thing. I don't know if that's a macro thing or it's just a micro thing in my mind. But can you comment on your opinion on that?
Yeah, I mean, it's just a function of education, going back to the monetary science monopoly board kind of analogies that we're making, right? When you realize that Bitcoin is the safest investment, you're going to act differently. You're going to sell the other assets and you're going to hang on to Bitcoin. Right. We're seeing that trend. And it's interesting that you asked Preston that, because Preston gets that. Preston Pish of the Investor Podcast, he gets that. He's not going to sell his other assets for Bitcoin. He's got most of his assets in Bitcoin. And so you're already seeing the interesting thing of what's happening over the last 4 years is the previous, before last 4 years, before we had podcasts like yours, this narrative wasn't there. This narrative wasn't able to spread. So people weren't able to understand that Bitcoin is the safe investment. It's where you want to keep your money in case something like this happens, right? If there's another global financial crisis, where do you want to run? You want to run to Bitcoin. If your banks are going insolvent and the government's becoming insolvent and they're starting to follow you around, where do you want to be? You want to be in Bitcoin. That's exactly where you want to be. And that's a function of education and doing your due diligence. And that's where, reading the Bitcoin standard and understanding monetary history, you start to understand that this is the safest investment. People are already moved to that perspective, including Preston Pish. The question is, when does the rest of the market do that? And that's a phenomenal question that I wish I could answer, but they'd have to do their due diligence. And one of the interesting things about Ray Dalio, Warren Buffett, and all these hedge fund managers, their full-time job is to make money, and they don't even know what money is, and they can't even be bothered to find out what it is. That to me blows my mind, because it's like they didn't even spend 10 minutes to study monetary science and economic history. It's baffling. Ray Dalio is the closest person, and he says that bonds are horrible investments. So it's baffling to me that this is even an opportunity for most retail investors or the average Joe to get ahead of people like Warren Buffett and Ray Dalio.
Blake, you've been so kind, and you've dropped so much knowledge on us, and this went way better than I thought. I knew it was going to be good. I didn't know it was going to be great. And so for those of us, there's going to be people who are going to want to, like the Learning Tribe, who are going to hear you and want to maybe reach out to you on Twitter. And so for everybody who's on Spotify and Apple and not watching on YouTube, can you spell out your Twitter handle for them?
Yeah, so you can find me on Twitter. My DMs are open. And my Twitter handle is Logical Bitcoiner, and without the E at the end. So Logical Bitcoin and then R at LOGICAL Bitcoiner BITCOINR.
Like,
so you can follow me there. Yeah.
How about coming back like in the spring, and we're just going to do a 10-part thing about what money is. You're right. I started thinking about. I thought money was just three things: a unit of account, right? Medium of exchange, and store of value. All right, that's a currency.
It's got to be divisible, portable, scarce.
So you're going to come back,
right.
and you're being voluntold that you're going to come back.
I'd love to.
Yeah, it was great. Thank you so much, Travis, my engineer.
No. Thank you.
No. Well, thank me then. And
You're welcome.
And of course, I couldn't do it without RoboRecruiter Dave Hampton.
Eternally grateful.
This is great. Eternally grateful he is. Remember, I'm David James, the Job Whisperer, and everybody remember, get whisper.